What's up, guys? This is Chami. Just want to kind of put together a video for you guys that is just going to go over the general market health, like where we see it in its current place, and maybe what to expect in the next couple months. Also, just go over some good stocks, like stocks that are currently market leaders, and then stocks that look to be shaping up to have a nice run if they carry out like a nice period of consolidation over the next couple of days and maintain that relative strength through what is expected to be a nice little market pullback, but you don't know. You never know. It would be constructive if so. Um, First things first, this is the IBD 50 index. So this is basically composed of the top 50 stocks or top 50 growth stocks currently in the market. So it's going to be made up of the market leaders. And as you can see, it's pretty extended from the 50-day moving average right now, which could is basically a negative because generally the market does not go much more than 4 or 5% above that 50 before pulling back. In fact, it very rarely doesn't. So I can go back all the way. It's usually the average is 45%, and we're up about 5% right now. So it's just indicative that we might be experiencing a pullback in the coming days. We basically may have already started that today and yesterday. You can definitely see some relative weakness in the markets right now. But also you have the IBD 85 index, which is basically just another stock list that's published by IBD every Friday, and it's generated based on stocks above, like there's like four different variables. So stocks above $15, the stock price is within 15% of its 52-week highs. EPS and relative strength ratings are 85 or greater, and then average daily trading volume is 10,000 shares or more. You can see once again it's pretty extended from that 50-day. So I look at this every weekend just to kind of grasp where the market is as a whole. What is the market breadth right now? So right now it looks like it's a bit overextended. So I would be very cautious to uh, when it comes to buying stocks right now because there's a very good chance that the market conditions in the short term at least are going to be pretty choppy. So you might get shaken out. And then once again, here's the big caps. This is the top 20 large cap growth stocks. So the market leaders right now are Nvidia, UPST, and Net. So these are like the big boys that are carrying this index right here. And they're the stocks that you always want to keep an eye on the top stocks right now because these are the stocks that if they start to fall, you could expect that the rest of the market will do the same thing. Um, and then also something to keep in mind or to take a look at is this is the amount of stocks that are over the 150-day moving average. Now, generally, whenever a stock's rallying or at all-time highs, like we are right now, you want to see the number of stocks above the 150-day moving average way above 45. You want to have it like above 60. So like this was last year's bull run. You see how like this was at the bottom of COVID and then it just exploded up all the way up to 91, which was the highest actually in history. If you go back here, oh, I lied. 2009 was, it looks like it, but the highest in recent time. So, in a good way, I'm just sharing this because this is like a good way to gauge the current market strength and plan based off of it. So, for instance, if we see other sectors start to break out, it could bring the overall market breadth up and make the rallies in sectors that are already strong even more powerful. And that's why I was so like excited to see IWM picking up last week because if that broke out, this number would start to come up even more. So generally you want this to be over 60. When you see this as over 60, it just gives you a lot more conviction when entering trades because you know that the overall market is really healthy and is bullish. So when this passes like above, we start to see this inching up to like the 55, 60s, that's when I'll become a little more bullish on the market. But short term, I'm a little bit bearish. I just think that the market's in need of a pullback. And then, but intermediate term, I think I'm really bullish. I think that a lot of the current sector ETFs have really nice bases that are forming, and that in the coming months they should break out and lift the entire market with it. But um, this is also like the daily market indicators that I share on the watch list. So this once again is just the amount of up volume versus low volume. It's kind of like just stagnating right now. And then you even have, actually I don't care about the oscillator, but you like to see that moving up. So like you see when the market's really strong, like it was in April and May, you see this pushing up with power. And then you have a fat pullback, and then it pushes up again. And we've kind of just been stagnating, which is normal because during the summer months, a lot of the big hedge fund managers, institution managers, they're all on vacation, so the volume is generally tapers off quite dramatically. So now that they're all coming back from their vacation and they're working again, hopefully we start to see that pick up in volume, and we start to see more overall market breadth. Because this is, although it's picking up, it almost looks like it's already. Actually, I would imagine that this is not updated yet, but when it does update, it's more than likely going to be coming down. So it's already tapering off, which is a slight negative. But this is the mid caps that are in SPY. See, they're in a nice base. This is what's nice about MarketSmith too. It gives you like pivot point entries. So, and then there's your stop loss. That's just based off of Bill O'Neill, Bill O'Neill's trading rules. So it's pretty cool. But yeah, the mid caps. Is this today? It is 9/8. So the mid caps, they're in this really nice base that seems to be tightening here. You see new lows here. Hopefully this is a bounce off the 50-day, and that's a new low, and then this is like a cup maybe, or excuse me, a handle, and then it breaks out. Because if we have the mid caps breakout, which is where most of the real money is made, is in mid caps, because these stocks generally have good earnings, they have liquidity, and they could really run. Like this is where stocks like Upstart and Net and Square reside. So this, you see this breakout, it more than likely will help IWM out, and hopefully IWM breaks out, and then you could start to see like this chart right here that I showed earlier pick up as well, and then the whole market has a little more participation, a little more oomph to it. So oh, this is pretty cool. So this is EWJ. This is the basically the Japanese SPY. If you look at the monthly, it's breaking out. This is a base from starting in 1996 and it's breaking out of right now. And based off some of the investors that I follow, they were mentioning that back in the day, like in the 80s and 90s, that basically the way other nations follow our ETFs because they're so important for overall market movement, they used to do with this Japanese ETF. So this is just something to keep an eye on. If this starts to really fire up, it could impact the US markets in a positive way as well. So, especially a base that's this big. Like this is substantially large. The larger the base, generally the more powerful the breakout. So, and then this is ARK. So ARK is what I usually use as like to I'll look at the IWM for growth stocks, but I really think that ARK is, since ARK has a lot of the market leaders within it and they are the growth stock leaders, it's more like if ARK's breaking out, then more than likely the market leaders are moving up substantially. And then the laggards will follow. So I really like to look at ARK, and we just really need to get over this line right here, the 132.5. But if we even break above, oh boy, if we even break above this, it's kind of like a green light for growth stocks. So hopefully that will generate enough power to finally break to the 132.5 pivot. But until the second we break above 132.5, which really we need Tesla's participation, we could really start to see the whole market participate in this rally and have some huge moves. Hopefully it happens in the coming months because it's really been consolidating for a long time. I don't like to see that it fell on an increase in volume today in a bearish engulfing. But we just got to keep our eye on it. At least we know what to look for, right? So we break above 126.25. We know that growth stocks are gaining some power, and if we clear the 132.5 area, some rallies could really start to take place. Okay, so then this is XLF. The reason I want to share this one, and I have this one on my radar, is because if XLF breaks out of this base, there's a lot of stocks in the financial sector, and that means that that market breadth once again over here will start to pick up and make the rest of the market strong. So if XLF can break out of this and financials start to participate in the low volume market rally we already have going on right now, we could start to see like stronger moves. So just good for overall market breadth. And then golds, I love this chart. This is, if you look at the monthly, like this is a massive cup and handle. And like keep in mind, like last year or the last 2 years, it went from 110 to almost doubled. So obviously it's not crypto gains, but it had a massive move, and it's just been forming that nice handle the last couple of basically the last year. So if this can take off, it's just another place to possibly trade. Not a lot of people like to trade commodities, which is understandable, but yeah, it's just in this base right here. So just a cool chart I figured I'd share. It's one I always like to keep my eye on. I have a bit of my portfolio that's my long-term portfolio always in gold, so I might as well watch it. But obviously the RS rating is atrocious um, on the monthly and even the daily. So and it's commodities, so commodities are a little more difficult to trade, a lot more volatility. And then here we have the iShare. This is the home builders ETF. Um, Generally benefits off of inflation. So if this could break out, it's once again, it's kind of like the XLF ETF. It could start to bring up the overall market participation as well. But today was actually kind of damaging to a lot of these charts. Um, I originally put this all together last night or on what 2 nights ago, and it looked a lot better. It was right here. It looked a lot better than this. So hopefully this 50 is an active support for a lot of these ETFs, and rather than break down, which to be honest I wouldn't mind a massive correction because it's easy money on the way up, but if it could hold, we might as well hold because we do have some nice bases. And then we have the retail ETF. So once again, a lot of these ETFs that have tons and tons of stocks within them are just forming some nice bases that are really tightening. So if one breaks out, it could be enough pull for the others to follow. So some definitely why I look at them every week just to kind of get a more broad perspective of how the market is looking. Because obviously, if this base was down here and was trending at a support, I would be even more bearish from the market because I recognize that these ETFs can drag one another down and it can like essentially turn into a snowball effect. So it's just good to know the general direction or the general strength of the market sectors, understand the weight of each one, and then put that forward into your analysis. This is a negative. The RS rating is breaking down from a 52-week low. So that's not 52 weeks, but from like 6 months. And then SMH. So SMH, this is another one. This ETF broke out and then it broke down, and then it's kind of just trending. Right now, it's sitting on the 21 day right now. So if SMH loses the 21 day today or tomorrow or in the coming days, uh, you have the 50-day active support, a couple dollars down, but you're probably going to see stocks like AMD, Nvidia. You have XNX or XLNX, like semiconductor leaders like those are probably going to start to uh, substantially decline or at least consolidate. They are market leaders, so hopefully they don't decline like that. But you're going to see the weaker stocks really start to dump, and then these ones will either just consolidate or fall as well. But today was honestly it wasn't that bad of a day. We closed what? Let's take a look. Yeah, like we're just super extended right now. So actually, this was a beautiful close. So the 21 day acted as support today, and we closed. I wouldn't say it was a beautiful day, but there was a lot of support here. There's still a lot of buyers supporting the market, and then the Qs. Likewise, the Qs are even stronger than the SPY. The SPY went down to the 21. The Qs bounced off the 8. So I wouldn't, and the Nasdaq is green for God's sakes. So the market still looks good. I wouldn't expect large declines at this time, but you also got to keep in mind that when the market's about to correct, it generally the selling starts slow and then amplifies. So I don't want to get ahead of myself there. And then yeah, so also if SMH breaks out, you could see another massive move to the upside in Nvidia. So this is still one to keep an eye on. If we break above today's highs tomorrow with volume, it's an 8 EMA bounce. You could use that. Yeah, that's like a little resistance. You could either day trade it up to that resistance or you could try to hold it longer, but just pointing out some trades. But we did fall today on increase in volume, so you got to be a little cautious. And then this is another market leader in the semiconductors. If you look at, so like, how do you judge what a market leader is? If you look at like, so this is the base for XLNX. Then you have the base for Nvidia right here. Actually, the base is down here. So that just goes to show the superior strength of Nvidia, not only in the semiconductors, but in the entire market. It's so powerful. And then you have stocks like AMD. This is another leader in the semiconductors where they already broke out of their bases long ago. And then XLNX is finally breaking out of the base. But if you were to determine the strongest stocks between those three that I just said, AMD, Nvidia, and XLNX, it would be Nvidia first, AMD second, and then XLNX third, because XLNX is just finally breaking out of that base, so it's essentially a laggard to the two market leaders right now, to my knowledge, in the semiconductors, which is Nvidia by far, and then AMD right behind it. So just good to know. It's good to know. It's actually crucial to know who the market leaders are in whatever sector you're trading, because the second those market leaders start to fade, more than likely all the others are going to start to fade in even stronger fashion. But basically, like, if you can overlook like the thin participation in the market right now, it's hard to be bearish on the intermediate term, but the short term risk is certainly elevated. So you want to have that mindset going into the next couple of days and or weeks. It's like this is where lack of self-control can like result in buying extended stocks in an extended market as laggards are finally breaking out. So rookies got to like they keep buying impulsively as indexes get extended. So just don't be carrying excess inventory here, because if the market does begin to flop, it could really hurt you. If you look at Netflix, it just broke out yesterday on like decent volume, but it's nothing like this or like that. Like there's some participation. Maybe it's just because it's the summer months, which would make a lot of sense, but it's also moving off the Seinfeld news. It's extremely extended. Um, if you look at the weekly, it's in a nice Darvis box right here. So, and as is Apple, but the volume is just not. It's not like really anything too special. It's there. It's above average, but it's not like that real power that you see from stocks that like Upstart right now, or like Nvidia has had recently. So with Netflix, it had an enormous run, and it's had that run without much digestion, and it's it's more than likely, if you're entering up here, although this was a buy point technically because it's all-time highs, it's more than likely going to shake out a lot of people if they bought up here. And Amazon, this is actually it's a big positive that this stock has tried to recover from its recent drop here. Um, the stock it's also in I think in a giant Darvis box, yeah. So a Darvis box is essentially just a flat base. You see, I had basically had a false breakout here, and it broke down. So now if we get back above um, this line right here, basically what is that? Like 3,550, you could see it basically making a second attempt to break out. So then this would be um, a short-term resistance, and then you could break beyond that hopefully. But if it overcomes this pivot point here, it's very beneficial for the market because a lot of stocks follow Amazon. But in conclusion, I'm really just a little bit concerned short term, but in the medium term, I'm like very bullish. But let's take a look at some of the current market leaders. Or actually, this isn't a market leader. This is just some charts to keep an eye on. So whenever you have a stock that breaks away, has a breakaway gap like this, where it's up 47% in one day, that's actually obviously that's very powerful. But if you have like this broke down to this isn't even a play. That's too bad. I'm sure a lot of these charts that I picked a couple days ago broke down completely, but if it forms a nice little shelf here and breaks out, these are generally the stocks that will run like 20 or 30 or 40% in a couple days or in a week or two. But what sucks is you're gonna have to take more of a risk because obviously the stock can move a substantial amount in a day. So if you're dealing with shares, if you normally have like a stop loss of like 3%, like you kind of have to like expect to lose a little more. It's just the risk you take, but these are the stocks where you're gonna have multi-baggers. So, but that broke out. Excuse me. That broke down on a pickup in volume today, which is not good. Now this is some strength right here. So Celsius, this is like a new merchandise. It's a drink. So I like to like whatever like if I see a brand like a lot, like say I'm out shopping or whatever and I see a lot of people, or I'm at a mall or something, I see people, I recognize that they're drinking like the same brand. I've seen Celsius energy drink like frequently recently. Like people are using it to like mix alcohol with, like it's a almost like a mixer drink kind of, but at least that's, I guess that's how some of my friends use it. But it's like it seems to be really popular. And today's close off of such a nice run, like it's already this extended and it still managed to close up 2% when the majority of growth stocks closed down today. This has really strong relative, the RS rating moved up today when the majority of growth stocks actually closed down. So this is definitely one to keep an eye on. Now it was on slight decrease in volume, but it's not, that AEMA act as a strong support. So this is what I'm going to keep on my radar. If you break above these tops, now this isn't an options trade, it's too low volume. But if you want to buy shares, if it breaks these tops with volume, this is 100% one of those stocks that could just run. Literally, this doubled in 3 weeks. I would keep my eye on that. That's certainly a market leader. And then you have Melly. This stock's kind of disappointed me, but it is in a nice cup and handle. Um, it also trades really thin, so it's like you can't day trade this. I mean, you get in at 1960, and then in 30 minutes it's down to 1924. So this is the basically like the Brazilian Amazon. For anyone that doesn't know, it's in the Nasdaq, which is the strongest index right now. But it's just, this is a tough stock to trade. You need to have a bit of a wider stop loss, so it may not be for everyone. It Let's see if this acts the AEMA acts as a support. Once again, trades thin. The numbers are pretty good. The revenue growth is, there's better out there, but this is definitely a possible trade. It's been a bit disappointing how it's acted lately. And then here's your market leader. So this is one of your market leaders. This is Upstart. So you could have bought. So this is what I'm like. Whenever you're trading a stock that is new merchandise, like Upstart, uh, so something that is a stock that's new to the market, it's new merchandise. Where you have old merchandise is Apple, Amazon, Microsoft, stocks of that uh, category. Basically, you have to understand that these stocks are just going to come with more risk. So a lot of people would not have wanted to buy a stock that's up 26% in a day, which is understandable. But in the current market, These are the stocks where you're making the only stocks that you're making money in. I mean, you buy Apple, it's failed a breakout like 8 times in the last like 2 months. Obviously there was good money in Microsoft, D-Dog, um, Amazon, Google. They did have decent runs, but you can't compare it to this. You're going from a low of 156 to 274 in 3 weeks. So you would have bought right here. You would have bought a small position. The low of the day is your stop loss, which probably would have been a pretty steep stop loss, but you would have been rewarded really well for that risk. So how could you manage a trade like this if you're worried that since you have a larger stop loss, um, that you could lose a lot more is you enter with a smaller initial position. So even if you enter with a 30% position size and you have a wider stop loss, if it say it's normally you would have a 3% stop loss with a 50% entry initial position. Sorry if this is getting confusing. You would then have a 6% stop loss with a 25% initial position. So you'd be losing the same amount as if you entered at 50, but you give the trade a little more room to work. So that's how I manage higher risk trades like this. I wish I bought this. I was sleeping on this guy. I think I saw it here and I thought it was too extended, so I should probably take my own advice. But that's a market leader. That's one you want to keep an eye on. If it consolidates, you definitely want to buy that breakout continuation pattern. Net's another market leader. One of the stocks, it's down today on a decrease in volume. I didn't see Upstart today. Upstart's, it actually closed up today. Wow. So this is just clearly the leader is Upstart. Net closed down, but on a decrease in volume, which is great. We see this form a nice, maybe hopefully a nice little base or even like a shelf right here. Maybe the 21 catches up and it consolidates for the next week or so. We would love to catch that break up. I would. These are the only stocks I'm going to trade right now is these market leaders. Or at least I'm going to pay very close attention to them. ZI unfortunately broke down today. Hopefully that 21 day acts as a support. I think some news came out about it. I can't recall though. And then Shopify. This is an example of old merchandise. I mean, it's obviously it's a great company. The fundamentals are sound. Um, yeah, it just can't get going. So hopefully this base holds for it. Maybe it's a large cup with a massive handle or something. RS rating is breaking down though, so it just a huge pickup in volume today on a bearish engulfing. This would be a nice day trade tomorrow possibly. A nice short. DocuSign. This I was so excited entering this week for this stock in particular. It closed with a nice close to a hammer on a huge pickup in volume, and then today or yesterday and today it's just been dumping. So I mean, it is what it is. I don't get too caught up in it, but it's just goes to show you where the current market is right now. There's so much uncertainty with market action that it could really get to your head quickly. So in times like this, I'm generally sitting on the sidelines, entering only top uh, top names in the market, and entering with smaller position sizes. That's how I manage my mental, because it's a tough market right now. It really is. And then Square, I mean Square. These guys are, they're in digital payments, buy now, pay later, crypto. They just have everything. They have a awesome comp rating. Earnings estimates are great going forward. It has literally everything. It's just the market doesn't love it as much as I do. I mean, the RS rating is 88, not 98, so that's proof in itself. But I do think it's so entrenched in the three major finance rails that it's going to work. It just won't probably be as dynamic as stocks like Upstart, but it is competition to Upstart. So this base may just need a little longer to. This is a horrible day for it, but this base may just need a little more time to form. if it breaks down the 200 day, I might look to buy a 200 day bounce play. It's just such a good stock. It's just not receiving that love right now. And then you have stocks like Sono, which, I mean, yesterday was just not a good day for growth at all across the board. Um, but for me personally, I love music. Like if I'm awake at home at any given time, I'm usually like jamming. So I think that if this stock comes out, this is like a great product. I have one personally. It's like it's in a pretty interesting pattern here, like a sideways cup and handle, and then it was just forming a shelf here. It broke down, but maybe it just needs to retest that 50 day once more. Um, it's also like fairly symmetrical, this pattern. It's nothing too crazy. I mean, right here you're close to all-time highs, so um, I would definitely buy some if it made its all-time highs. Like this would be one of those stocks that, despite how crap the market seems right now or how difficult it is to trade, this is one that I believe is worth the risk. Um, and again, the general market is extended, so I would probably wait for digestion, but you kind of just got to play it at the time that you got to. Sometimes you just got to swing your bat and use your best judgment, trust your gut. So, and then you have Devon Energy Corp. This is a commodity play, which I'm not really a fan of, to be honest. But um, so oil pulled back substantially, along with all the oil stocks in the past month, and this is the stock that, based off my research, is leading. That's a liquid stock that is leading the rest of the stocks in the oil industry. So, although I probably wouldn't trade this personally, it's definitely warrants looking at least. Um, it's like an ugly little consolidate. It's ugly. Like you see at commodities, why I don't really like to trade them is they're so like volatile, like back and forth and gap downs and then gap ups. Gap downs represent excessive weakness, and then gap ups excessive strength. So like it just kind of like throws you all over the place. But you could almost use this pivot here as potential entry, and then you can add on incrementally going up. But the RS rating is great. The numbers are great. The accumulation distribution rating is trash, but um, just one of those stocks that I would keep an eye on since it's liquid. And then you have Dexcom. Why I like Dexcom so much is like this stock is clearly extended, but I found out like over the weekend that apparently there's going to be a new product that's going to be coming out maybe in like December, and it's going to like basically like it's for like managing diabetes, and it's going to talk. I don't know how it all works, but it's going to talk to like the insulin pump. So it's going to monitor your like blood levels, I guess, and give you the right amount of insulin. And I think that's why this stock is moving ahead already. So with so much strength. I really like it a lot, but it's clearly extended. But if we do get that like digestion that I'm looking for in the market, I would like to see. I think this could be a good buy. And then we have FSLR, which, wow, I didn't see this today. It pumped and dumped today. So right now there's clearly a lot of strength in this stock. So it will be in my radar tomorrow for sure. I'll see how it moves. Um, but what I liked about this over the weekend is that like this digestion is getting a lot quieter. Like the volume is starting to drift off, and as oil rises, it makes solar look better and better. So this stock just has very intriguing digestion as of recently, and if the stock comes out on monster volume, I could definitely overlook the flaws of like the big bump that it had. Where was it at? Like right here, where it just pumped and then dumped uh, off of its earnings. The base isn't really elegant at all. It's not like one of those pretty bases I like to trade, but if you look here, so look, it looks like it got rejected at this trend line today. So you know what? I think I would wait for it to break above. So maybe it breaks above 97.55. I don't know how I'd play this. Maybe you start a really small position here, and then if it breaks above this trend line and closes above it, you can add a little more. It would be a little bit it would be a little bit difficult, but the accumulation distribution is definitely there. I'll keep my eye on it. You'll know if I'm you'll see it on the watch list if I think it's warrants a potential buy. And then Dash, it broke out on low volume. I mean, it breaks out here, and just a couple days ago it had a huge selling day. So it's just pretty sketchy buy if you were to buy it. Then it's just not. There's no conviction. So for me personally, I'm not interested. I'll keep an eye on it though. And then Sailforce. Sailforce is like been basing for literally like a year. It's like it's more of like a grandparent in the growth stock world than anything. But a good buy would definitely be like all-time highs if we can get there anytime soon. It's so lethargic. RS rating is weak. At least it's been selling off in a decrease in volume. This could actually act. Maybe we have a 21-day bounce. Just keep an eye on it for sure. MDB. Oh yeah, so this one I would like to see these lows act as support, and maybe we form a nice shelf here and then have a continuation. So these are the stocks. As much as it looks super extended here, generally stocks that are multi-baggers open up with a massive gap. The rally will start with a massive gap up. So this literally ran 26% in a day. If it can consolidate here for a couple days, maybe a week or two, and then it will have a continuation breakup, I would totally be there. Same thing with Bill. This is a prime example. You see how that massive gap up 29%, consolidated a little bit, and now it's up. And to keep in mind today how weak the market was, especially growth stocks, how this is still closing up a percent. Great way to gauge market strength. So Bill is a market leader for sure. I would keep an eye on what was just up? MDB. So that looks like it's it though. Sorry, that was a really long video, but hopefully that helped you kind of gauge the current market strength. Maybe strategize a little bit. Like I would definitely be a little more cautious in the coming days. Just protect your cash. Be a good seller. Things along those lines. So yeah, you guys have a good rest of your night. Hopefully it was beneficial watching. Sorry it was a little lengthy, but it is what it is. Catch you guys later.